Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Arweave and its token AR, conduct machine learning based price forecast, regression analysis, accumulation strategies, risk based level, and technical analysis. None of the content is financial advice. All of the content related to this website, cryptoweeklies.com, link on the bottom of your screen, is available for free. You don't have to pay or sign up for anything. The reason that we are covering Arweave today is because we believe on the channel that Arweave is close to its range lows that it has started forming since about early to mid June of 2022. Again, there was a breakdown towards the end of May of 2023 till about October of 2023, and then the token kind of jumped back from that level. Again, that level corresponds to about $6.5. Again, there is potentially towards the bottom there is about 39 to 40% drawdown from here if it were to test its bottom that it created in early October of 2023. So that's the downside per this Fibonacci level interpretation, and the upside from the Fibonacci based interpretation is again till about $24, that is 0.23 fib level. If there is a bull rally in the market, that is again a 4x from the current price. Then the second level at around $36, and the third level which it hit back in May of 2024 at around $46. So if you were to look at weekly average prices and conduct machine learning based price forecast for Arweave since about token launch in 2020, with a non-euphoria case in mind, that is the market doesn't go too euphoric like it did back in January 2024 till about March of 2024. In a span of 2 months, the token essentially did a 4.5x from $8 to about $37. Instead of that, the recovery in the next 6 months is in a non-euphoria phase or one standard deviation bull case for Arweave per the machine learning model is between $7 and about 24, close to the $24 level, which is quite confluent with this 0.23 fib level. So that is the non-euphoria bull case per the machine learning based model, again trained on weekly price action, and you can see how this uses a seasonal ARIMA as well as box cost transformation and LSTM and XGBoost based machine learning based in-house model that we have for not just for Arweave, for most of the top 100 cryptos by market cap. And this is on its USD pair. If on the other hand there is a 2 standard deviation or a euphoria case in the market, where the market rallies in a V-shaped recovery and has the parabolic run that the crypto usually has in the post-halving year. Again, this would be the second post-halving year for Arweave. That is, this token launched in 2020. After this 2020 launch, there was a seasonal bull market till again, and Arweave had series of higher highs and higher lows starting again end of the last halving year in 2020, then again first peak in 2021 post halving year, and later half of the halving year in November 2021 when it put its all-time high at around $75. In 2024, that was the halving year. The first peak was at around $44, again quite confluent with its 2020 high, and then there was a brief lull till about the end of halving year, and then again rally kind of took off in the post halving year, whereas in this particular iteration there was a higher low in the end of halving year, and then the token has been going down in the post halving year, again coming close to some of the major supports that the Arweave did put since about 2022 bear market began. So a 2 standard deviation bull case for halving at around for Arweave at around $8.50 till about $60. So that's the 2 standard deviation case, which is again similar to what the 0.618 fib level says from its previous all-time high at around $75 and wicked at around $90 at its previous market cycle peak. From peak to lows, accounting for the weekly wicks, the price at around 678 fib level at around $57, again that is close to the 2 standard deviation bull case for having for Arweave in the next 6 months. In case of the directionality based model, this is the pink line which says that if all things are equal in the market, the likelihood of prices for Arweave going higher with time is higher than going lower with time. The bear case for Arweave, though, in the next 3 to 4 months, again price action. If the market does sell off in the next 2 to 3 months, the price action could see below $3. Again, we like to cover all the scenarios. No one can tell if the prices have to go up or down, especially with this volatile asset such as an altcoin. But this machine learning based approach, what it does is, if there is a hypothesis that the market will rally with time because of seasonality or because of quality of an asset or adoption, this machine learning based model help model out what could be a price in a, let's say, a non euphoria bull case for a token in a recovery phase, or a euphoria case, what is theoretically permissible using its own price action as well as seasonality based signals and data science based models and machine learning based forecast as support to provide some sort of modeling capabilities of the price in next 3 to 6 months. So if you are interested in following these forecasts in a tabular fashion, they're also available at the bottom of your screen. The base case, which is this pink line, is the column in this middle area. To its left are the 3 bear cases and to its right are the 3 bull cases. The way to interpret this, for example, for the week of April 6th, the likely price action for Arweave per this model is at around $6.45. There is a 68% chance that the price stays between $4 and $10. Again, this bear case at 68% and bull case at 68%. There is a 95% chance per the model that the prices stay between $2.46 and $15. So with 95%, that's the 2 standard deviation confidence level that we discussed in orange line, and in the red line is the 3 standard deviation, again, which tries to capture what could be a price in a blow off top event that is coming in at around $145 for Arweave, which is, again, if we go back to the Fibonacci level, that is very close to the 1.618 Fib level for Arweave. If we look at Arweave in terms of regression based fair value, we'll see that Arweave right now comes again, the fair value comes down to about $15.50. That means Arweave is trading lower than the fair value. This polynomial regression model helps identify if the token is, with respect to its fair value, which is a non-linear function based on the phase of the market cycle, the fair value increases in the bull market and decreases in the bear market. That is typical for a altcoin, again, especially during accumulation phases. If we were to think of accumulation, again, a non-linear model makes more sense for altcoins which do oscillate in between the bear market and the bull market in terms of what the fair value is. If we apply even more rigorous framework and say that instead of accumulating at the fair value, why not accumulate at 1 standard deviation residual applied to the fair value to the downside, wherever the price offers a discount not just based on its fair value but 1 standard deviation residual applied to its fair value. You will especially see great deals accumulating even if you are in the middle of a bull run, and if you have a shorter time horizon, accumulating below this green line, or in the depths of the bear market accumulating sub $5, that this market presented 3 chances, first in June-July of 2022, then the later half in June of 2023 till about October of 2023, and now potentially since about February 2025 till about now March 10th of 2025, the 1 standard deviation residual applied to the fair value comes at around $8.50. So accumulating below, per this model, accumulating below this value, if the hypothesis being that there is one more rally for Arweave in this bullish cycle or bullish phase of the market cycle, then again there is a mean reversion likely, which happens not just to the fair value, which is this blue, which is this pink line. It usually in the bullish phases of the market cycle. So, for example, from this green line till this yellow line, and also potentially to this orange line, that's the 2 standard deviation residual applied to the fair value to the upside, that helps identify what is the 95 percentile peak for Arweave. Right now that 95 percentile peak is coming in at around $51. The 68 percentile peak is coming in at around $28. So the euphoria phase begins when the price, when and if the price goes higher than $28. That's when the market starts feeling overheated like it did back in February of 2024, and once the price goes close to this orange line or slightly above this orange line, that's when the market takes a breather again. And a caveat being, at times if the market is in a blow off top phase, the prices could see the 99.7 percentile peak coming in at around $92. So that's why the market is always hard to predict. There is no such thing as a sure thing in the market. So the first key level to watch for Arweave, definitely that $8.59, and then the second one at around $15.56. Following that, that $28 level, which is confluent with the 0.23 Fibonacci levels as well, because this valuation is going down with time. So in future, if the rally takes 3 to 4 weeks, this what is today $8.59, that could easily be $8.25. This could be $15, and this could be somewhere close to this $26 to $25, and similarly this $51. If you extrapolate that for 3 to 4 weeks, this could be at around $45. So that's how we analyze this regression based valuation. Looking at the simple moving average, that is the 20-week simple moving average, price color coded with respect to the 20-week simple moving average helps establish. So for example, this is the price chart for Arweave over here. In terms of tokenomics, again 99% is already in circulation. That's a good thing. Now if we color code this price, instead of looking at price as a single data point, we look at it as how the price is doing with respect to the 20-week moving average, and per that relationship we codify if the price is risky, if the asset is in a high risk mode or low risk mode. Particularly for altcoins, again, especially whenever the risk level is elevated, that is higher than 50%, that's where you see a blow off top phase in the market, where again DCAing at this phase of the market cycle eventually, again, if you're shorter time horizon and if the asset is a bleeder with time, DCAing at this phase has the max pain, or the participants feel the max pain if they DC at this point in time. Again, this model helps identify those phases, and especially if you have that hypothesis not to DC at this time, or even DCing out of the market at this phase of the market cycle, this model does help identify those phases again. And you can per your own risk tolerance. So for example, higher than 70% risk helps identify those tops. The other side of this thing, of this analysis, is that DCA only again during the undervalued phases. Again, this model does that not that of a great job identifying accumulation zone. We have different model for that, the time weighted average price model as well as the DCA model, but nonetheless, if this model does help identify if you have 20% risk tolerance, again some of the zones where the market does offer a decent risk reward. Again, if you go higher than that, again 30% risk, that's where it kind of encompasses all the non euphoria phases of the market, where DCAing if along with some additional metrics helps identify potentially a good entry point. So if per this model, if the risks were to go back to that hypothesis that we had earlier, whenever the risks are between, let's say 50 to 80%, that's where you get your most of the overvalued phases. What could be the price in future if the prices go between that 50 to 80% risk? This is a forward looking forecast for the price of Arweave with respect to the simple moving average based analysis. The model says that between $42 and about $57, between $42 and $57, that's where the peak of the next rally could be. Again, we are not saying that the price cannot go higher than this or has to go to this point, but again, per this model, the estimation is that if there is a rally in store, that could peak at around between $42 and $57. Again, that is the shorter term analysis of the rally, and the higher end of the rally between $60 and $68 for this model. Again, we have a confluence of all the model and aggregation of that coming at the end. The regression based model helps identify, based on the same polynomial regression function, the relationship between the price and the fair value regression line, helps estimate what is the phase of the market cycle. Again, this model does a fair job identifying the accumulation zones in the bear market. By that I mean, if the hypothesis is that the DCAing below, let's say 20% risk, or even if you have even more even less risk tolerance, DCAing only less than 10% risk, again that those phases are identified perfectly or with near perfection in this by using this model. Again, you can see this model predicted that October 2023 bottom as well as June 2022 bottom, and also the cool off phase between the 2021 rally. Right now, per this model, the risks are in a similar phase, less than 10%. Again, if per this model, the hypothesis being that if the prices eventually go to between this 50% risk and 70% risk, or let's say between 50% risk and 80% risk, this model does identify that range between $28 and about $41. So again, the other models, the SMA models started its risk journey or the had 50% risk at $42, whereas this model says that that $42 would be 80% risk. So the reality could be somewhere in the middle, taking an average where $42 Arweave would be somewhere close to 60-65% risk, instead of relying on just one model where that increases the determinism with respect to one model. We have an aggregation of all the models coming up at the end. The last but not the least is the time weighted average price model. Helps provide a clear cut accumulation zone between the end of the bull market and beginning of the next bull market, especially when the price is trading below the time weighted average price, which is color coded, or this line which is in blue. And based on the relationship between the price and the time weighted average price, the risk levels are also identified. Per this model, again, this model helped identify DCA below $20 from May of 2022 to about February of 2024. Again, the hypothesis with this being the underlying asset is of high quality and has a further room to participate eventually when the market recovers. A similar accumulation phase is being presented right now, especially since October 2024, where there was a brief deviation from this valuation trading below the time weighted average price, and ever since about when January 2025 began, so since the beginning of the year, the market has presented this price action where the current price is trading below the time weighted average price. The time weighted average price is around $17. So with that hypothesis that eventually if there is a rally in the crypto bull market for the remainder of this particular bull market, and Arweave taking part of that rally, at this point, again, this market has provided about more than 50% discount on this time weighted average price based $17 marker, whereas the current price at around $6.35. So all in all, if we look at the estimated bull target for Arweave and its token AR, over here trading at around $6.48, regression risk less than 10%, time weighted average price risk because the price is below the time weighted average price. That model says that whenever that phenomena occurs, it's essentially a zero risk because the price is below the time weighted average price. The SMA, or the 20-week moving average price risk, was 12%, and the weighted risk comes at around 5%. So that's the interpretation of all the models. And if the prices were to go to that 100% risk and eventually have a 100% peak, that 100% at the price at that 100% risk would be at around $132, and that's the estimated bull run peak if Arweave were to go to that 100% risk. If on the other hand, if it falls short of that estimated bull run target for any reason, again, there is no guarantee that any particular token has to go to that 100% risk. So if we divide that 100% risk in increments of $13, if you divide this number by 10 and create your own 10% increments of this bull run target, somewhere that 50% of this comes at around $65. Between 50% and 80% would be at, if you add another $35 to that 65 target, around $100. That's where the 80 percentile bull run peak for Arweave could be eventually. Again, not financial advice. So hope you enjoyed this content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.